Hello viewers, we are talking on life skill for graduate course on Swayam MOOCs. Today we'll be talking on the 21st century life skills of module 4, lecture 3, which basically focus on financial literacy. This lecture deals with the introduction, what is financial literacy, need of financial literacy, budgeting, why it is required in today's world, saving and investment, taxes and financial aid. First of all, we'll be talking of what is financial literacy. Financial literacy is a term, we can say it's another new term which we have in our day-to-day life and we are using. It is actually a behavioral practice used by each of us in everyday life. Our mothers used to save some amount aside from the unforeseen future requirements. We have some sort of saving in form of piggy banks or some sort of investments by our parents. Everything comes under the umbrella term of financial literacy. So whatever we are saving from our day-to-day expenses to meet the challenges, certain unforeseen challenges, comes under the term of financial literacy. The COVID-19 pandemic brought attention to the significance of financial literacy by demonstrating how lack of knowledge about financial affairs may make problems worse. Many people around the world, but especially in India, experienced several financial hardships because of leaving their jobs, having their other income cut, and having to pay for unforeseen medical bills. People with low financial literacy were frequently poorly equipped to handle this unexpected evil. So, what is the basic need of financial literacy today? Because the young graduates are moving out of their secure home environment, out of the world to be there independently, therefore they need to be financially literate. If we see to the definition given by OECD of financial literacy is set of awareness, knowledge, skills, attitude and behaviors that enable individuals to make informed and smart financial decisions. Together with improved financial access and adequate consumer protection, it is part of a holistic approach to support financial resilience and well-being. Therefore, we need to be financially literate if we have to support ourselves in unforeseen situations. Financial literacy is also defined as combination of financial awareness, knowledge, skills, attitude and behavior necessary to make sound financial decisions and ultimately achieve individual financial well-being. That is another aspect of financial literacy as defined by Atkinson and Massey. Another definition which the World Economic Forum gives of financial literacy is financial literacy involves understanding and effectively utilizing various financial skills, including personal financial management, budgeting, and investing. Therefore, we can say that financial literacy is a broad umbrella under which we have to keep our finances or our savings in a situation where it can be used when it is required. Let us take a case of Raju. Raju is a lower middle class small businessman located in rural setting of India. He had the fast growing business in 1990s where he devoted most of his time to earning and saving. He invested some of his money in policies. With time, his family expanded, so did his needs and expenses. To meet this, Raju kept working hard and barely left any saving. What he was doing, he was earning and he was spending. He was earning well, but he was also spending well. Some of his initial saving went into vain due to bankruptcy of those unverified sources. Raju started taking loans both from public and private lending agencies at high interest rates. The expenses and income ratio has also distorted drastically and his business was not yielding as it was yielding initially. So now what was left? He was not left with any sort of financial safety, neither to look for his health or to anything else. To this, COVID pandemic stuck, which put an enormous financial loan on him, due to which his living condition worsened. He became tense due to the situations which had arose. At the same time, this impacted his personal, professional, social, as well as mental health. So what was there? Had he been financially literate, he would have invested what he was earning at early age judiciously, and he would have put all these things in a proper area where he could get proper rewards from them, and he could use this when in need. So had it been for him to know how to invest his money properly, he would not be in the tension which he was during the COVID pandemic, or when this such unforeseen condition arise. Therefore, we need to be financially literate in this modern times, when we have to be outside our houses, we have to move out of the secure environment which was provided earlier due to family relations, due to support from the family members, society, etc. Now, our financial health has to depend upon our decisions which are to be taken. Therefore, it is needed that we take informed decisions about our finances, so that our future is secured in terms of finances. Why do we need, therefore, financial literacy? It provides financial safety and security. Our lives are totally dependent on money today in all aspects. Financial stability is required in sailing through all sorts of financial hurdles. These ideas assist people in laying their groundwork for financial security, equip them to successfully manage their present requirement and long-term objective. Now, what has to be done? We have to have informed decision about the financial investment areas or financial investment policies which are there. Next, budgeting. What happens many times, as we were seeing the case of Raju, when he had lot of money, he was earning well and he had less expenses, he did not save or invest properly. So what was the result? When it was required, when he required more money, then he was in dearth of the finances which were there earlier for him. Your family expands, your requirements expand, and then there are certain contingency expenses which are always there. So that is required. So while you are making financial decisions or while you are earning, budgeting is very important. Managing all sorts of investment and expenses play a central role in budgeting. Budgeting itself is a skill, requires one to be financially literate to make informed decision and prepare for all kind of unforeseen circumstances, unforeseen situations which are there. So you must, whatever you are earning, you must always, like a piggy bank we said, we must always keep there in the piggy bank which we had. So that has to be kept in mind. Then when you are taking financial decisions properly, it imbibes confidence in you. So because if you are financially secure, you are confident to take risk, you are confident to make other sort of investment in various areas. So a financial literate individual gathers the confidence of where to spend, how much to spend, the worthiness of the expenditure, possible sources of income, worthiness of that income and the source, etc. Why we were seeing the case of Raju, we saw that he invested, but he made bad investments. If you made bad investment, then what happens? That you do not get the expected rewards in terms of finances. So that confidence is lost, and next time when you want to make investment, you will again think again and again or not be sure. That is required. If you are financially literate, you will not commit this sort of situation, and therefore you will not lose your confidence in taking certain strong or even you can say risky decisions. Also, you have to be financially literate to avoid financial frauds. Today we are expecting lot of cyber frauds in the financial setup. People give their OTP, people give their bank account, and money is siphoned from their account to unknown account, and then you cannot get back that money also. So if you are financially literate, although the banks and the various financial bodies, they keep on saying that do not share your OTPs or your bank account details or your credit card details when it's, but that requires financial literacy not to share all these things, or if you have to share, what to share. So to avoid financial fraud, you have to be financially literate by empowering people to identify the warning signs, make wise decisions, and safeguard private data. Financial literacy helps them to avoid financial fraud. Financially literate people are better able to identify scams such as phishing efforts that request personal information or investment programs that guarantee irrational returns. It is both. Sometimes you make investment thinking that you will get a huge amount of return, but it is not so. So that has to be kept in mind. So in short, a financially literate individual can avoid most of the frauds through his information, knowledge about this basic life skill, which is very important in the globalized independent world today. Achieving financial goals is also very important today, because everyone, every young individual who goes into the job market or the young graduate has certain financial goals which he keeps in mind, that after 10 years I should have this much of finances, after 5 years I should have this much of finances. It's not like earlier times when our young graduates were careful. They are much more sound in the financial aspect today than in the earlier times. So financially literacy gives people the information and ability they need to properly manage their finance, both what they earn and also what they get from others. It helps people to make sensible debt decisions, stay away from high interest loans, and invest sensibly. Both all these things are very enchanting. People are ready to give you debt, saying that you can take money right now and pay back later, but that the interest which they give, that is very alarming, and you should always be careful while taking loan or debt for anyone. So because you are not actually paying as much as you took, you pay much more. Therefore financial literacy helps you to take wise decisions while you are either taking loans or investing in any area or any person. Hence, financial literacy tells us why we have to be literate in this area. If we see financial literacy, we see that there are various components of financial literacy which have to be kept in mind. Basically, we can say they are budgeting, credit, saving, investing, and managing taxes. If we look at them one by one, budgeting. Budgeting refers to spending, investing, saving, and giving away what money we have. So in budgeting, what we do, whatever money we have, we put it in 4-5 areas. Something we spend, some we invest, some we save, and some we give away. So these are the 4 prime areas where the money which we have is budgeted. By striking a correct balance between the main use of money, people can more effectively distribute their wealth, leading to prosperity and financial security. A budget should be created so that all outstanding debt is paid off and that funds are set aside for investment and saving. When you create a budget, you must also have a contingency expenditure which is there for some unforeseen expenses which may come your way. Making a budget is a proactive way to manage your money. A budget makes sure that you have more money coming in than going out, and it keeps a track of your earning and expenses. This enables you to prepare both for immediate and long-term objective, pay for living expenses, and purchase items that are significant to you. How to develop your own budget or how to plan a successful budget, that is very important. To keep in mind, which we have discussed, that budget is something where we have to spend something, invest something, save something, and give away something. That if we keep in mind, then we can plan a successful budget. That is, we can set a financial goal that this much amount we must have after we have spent the money which we have. Two things we have to, the incoming and the leftover, that should be kept in mind. We should understand the income, we should understand the spending, and then we should create a budget. Any budget should have certain thing left in the kitty so that it can meet the expenses which are there at an unseen event or unseen situation. Next is credit. Credit is while the ability to borrow money or to get goods or services with the promise of future payment. So when we are having some money in our kitty, then we are able to invest in something which we may require in future, and when we have a sound financial status, then only we are able to borrow money on credit. Credit, which is the ability to borrow money or get goods and services with promise of future payment, is understood and managed responsibly in context of financial literacy. In modern economy, credit plays a significant role, as does our standing as borrower. You spend some time learning how to manage your credit if you want to have best credit reputation. This is particularly crucial when you come out to find a job, renting a flat, financing a car, or purchasing a home. In all these things, you require certain credit, and that only can be got if you have sound financial information about various sources where you can borrow money at a suitable rate or at a suitable interest or at a suitable condition. Your future will be better if you begin establishing your credit profile as soon as possible, because credit profile is something which makes you financially stable in these times to come, because you don't have all the money to buy a car or a flat at once if you're starting as a young professional, but you can have a sound financial information, sound financial knowledge of how to borrow money and how to pay it off in a definite time. That is very important. Therefore, if you have to have a proper budget, if you have to have a proper credit, then saving and investing is also very important. The earlier you begin, the better it is. How to start saving and investing, that is very important for a young graduate or for a young individual. What to save, when to save, how to save is very crucial, and he should understand it by taking an informed decision. First thing which we have to keep in mind is paying ourselves first. This simply means that whenever we receive any form of payment, either from our parents or from any other source, we shall keep some amount separately which can be used in case of emergency or meeting our everyday expenses. What happens in this time of digitalization and online economy, there's plenty of opportunity of saving and investing our money. But before we do that, we should have proper information. So when we get some money from somebody, or if our parents give it, or we get our first salary, you should carefully plan what we have to keep for oneself. That is very important, because you may need certain amount of money in crisis situation, and that we have been seeing from the example which we dealt in the earlier in this lecture. Then what we have to do, we have to keep the track of the savings. We have kept something for ourselves, then we have to see where we are saving the money. This helps us to analyze our unnecessary or not so important expenses. So first, keep some money for yourself, then keep a track of where you are spending. What happens with emergence of online banking facilities, saving mostly go unmonitored. Also the credit card facilities, the savings go unmonitored. So we must keep track of our savings, how much we have at any present time in our bank or in our reservoir or in our piggy bank, whatever it is. Also, we must set a goal and plan ahead. We need to have defined set of goals in terms of finances which can be used in times to come. See, if you are a student now, doesn't mean that you will remain a student for lifetime. You need to have a defined goals in terms of finances, which can be used in coming times. For example, the gap between your graduation and the employment. Then, if you have certain finances, you must keep those finances for that gap before you have finished your studies and you've got your first job. That is time when you can use the reservoirs which you have. So this has to be kept in mind, and this can only be done when you are investing, when you are having track of your saving properly. This, what happens if you are able to do this, then your goals of prior situation which you have set can be achieved more significantly and easily, and this amount can become handy for reaching your financial goals. Most of the students, what happen, they are earning through multiple sources, through part-time jobs including tutoring to support their education and post-education expenses. But while they are earning, they are also spending, not keeping enough money in their kitty for times to come. That has to be kept in mind. While you are earning, you must always keep for yourself or pay yourself certain amount which can be there in your bank when you do not have anything else. There are multiple sources of investment which we were talking, how we can invest. There can be savings, like household savings can be there, government savings can be there, bank savings can be there, scholarships and grants can be there. Then we can also invest in mutual funds, government bonds, life insurance policies, cryptocurrencies, deposit scheme, stock markets and SIP. So this is how we can have our savings to be in a good situation, and how we can invest this saving also. We can have the savings and we can invest it judiciously when required. Next, financial literacy is taxes. See, all of us, while we are in this uh, country or any other country, have to pay certain taxes on the income we have. Generally, whatever income we get from any source is taxed, because it is the way how we pay back to the amenities which we are getting. Though it is this is the basic knowledge which we do not require immediately, but knowledge of tax system is always beneficial for a young graduate. Although a young graduate may not have to pay taxes, because scholarships and savings which they earn from their tutoring or some side business are actually not taxed, but taxation rules or taxation schemes should be there in their mind. So whenever they come into the pay package, then they are able to know what taxable income they have, and therefore they will be able to invest and save judiciously. To become financially literate, one must learn the various taxation schemes and how they can affect a person's net income. Each source of income is taxed differently, where it comes from and where employment, investment, rentals, inheritance and an expected source. It can be from anywhere. It can be from employment, it can be from rentals, it can be inheritance or any other source, but it is taxed if it is required. Understanding the various income tax rates promotes financial performance through income management and allows for economic stability. To take Indian taxing system in India, it is classified into, if you take off Indian taxation system, it is classified into direct taxes. An individual or organization pays this tax directly to the imposing authority, which is typically a government agency. This type of tax includes income tax, property tax, corporate tax, etc. Indirect taxes are those taxes which are imposed on goods and services, that is paid by consumers through higher prices rather than directly by people or business, is known as indirect taxes. This type of tax includes goods and services tax, the GST, value added tax, the VAT, custom duty, excise duty, etc., which we pay on goods and services, and it is not directly on our income which we are receiving. So, knowing about income, knowing about budgeting, knowing about savings, knowing about taxes helps an individual to have a sound financial health. And the financial health which an individual has helps him to see how we can invest properly in our times to come and how we can save for those situations which are very tricky or very crisis oriented. Financial health therefore refers to general states of one's finances and is a fundamental indicator of their soundness. It can be described as keeping the current lifestyles and reaching desired lifestyle in future. So if we are financially healthy, we will be sustaining with the income and the sources of savings which we have. This will cover necessary expenses, obligations, and ideally being able to afford anything one's desires in future, keeping the current lifestyle and reaching desired lifestyle in future, including being able to cover necessary expenses and obligations, and ideally being able to afford anything one's desire in future. This is how financial health has been described by Ritsalu et al. In 2024. Therefore, financial literacy is prerequisite in achieving financial health in all facets of financial planning and decisions. In today's time, it is required because the young graduates, as I have emphasizing, they have their own source of incomes which may be vast at a very early age. So they should be know how to keep this income properly, how to save it, and how to judiciously use it. The budget aspect is very important. Your income and expenses should meet. There should be some money which should be kept for unforeseen situations. Also, having proper knowledge and information and understanding about the various provisions of investing properly is very important for youngsters today, because that will lead them to have a financial security in their future life. Today we are having lot of financial frauds. If you are financial literate, you will be saved from those financial frauds. Not share your account details or OTPs with anyone in any situations. That way you will keep yourself also safe and your money also safe. Thank you so much.